All right, good morning, everyone. Thank you so much for joining us. We'll get started. My name is Adrienne Laosa, and I am the managing partner of Treaty Oak Properties. And today's webinar topic is how to maximize success in residential real estate investing. Our featured guest and local real estate investment expert is someone that I personally admire a lot. Her name is Jen Berbas. She's the owner of the Berbas Group with Bramlett Residential. Jen has really always been a pillar in the Austin real estate community. And after joining Bramlett Residential a few years ago, I have had the pleasure of getting to know Jen and her whole team. They are next level, in my opinion. Jen is, she's someone that I consider to be not only a thought leader in our local real estate community, but a kind, professional, and intelligent businesswoman and investor. So naturally, I would choose her as today's guest. We are going to follow a pretty loose outline for today's conversation about real estate investing, but I will hand it off to Jen. Jen, why don't you introduce yourself? Tell us about how you got into the real estate market and about your background and where you're at today.
I started investing in real estate in 2000. I was a trader for 16 years, so I was in the financial markets. I was an options market maker. And for me, I didn't really want to invest in the stock market for retirement just because that's where I made my money. To me, it felt like I was double dipping. So I was really fascinated by real estate, did a lot of research, started purchasing property. And then after a 16-year career in finance and a career at another several years in operations at Dell and HP, I decided I wanted to do real estate full time. For me, it was about creating a really great customer experience through process. And our real estate portfolio at the time had gotten to a point where the day job, corporate job was a little distracting. So I just wanted this to be the primary focus.
I think that is very cool. I always think a lot of the top producing realtors that I know have really interesting backgrounds, like CPA, finance backgrounds, things like that. So I always love hearing about your past life and how you have curated it into making real estate work for you, because it is possible. When people decide that they want to jump in real estate, sometimes we hear like, oh, it's not easy. But obviously you have every single tool, in your arsenal to make you successful. So I think that is incredible. We'll sort of jump right into the topic. Obviously we want to talk about today. We want to help our audience understand how real estate investing works, but really acutely to you and your systems, and what's been working for you, and maybe more importantly, what has not been working and what you've seen over your tenured experience in the real estate market. So to start it off and sort of set the tone, we'll talk about just like current market, trends, market overview, what you're experiencing now, what the last year, maybe 2 years has looked like for you guys, just general thoughts and synopsis on what you're experiencing.
In the rental market, in my own portfolio, and we help a handful of clients. For the most part, I send clients to property managers so everybody can, do what they're good at and what they do every day. But with my own portfolio, I've also noticed that, I'm having to keep the rents a little bit lower. I'm not really increasing rents. We have a ton of inventory in the rental market, just like we do in the sales market. And especially this time of year, if we do have somebody with a vacancy, I'm encouraging them to lower their prices, because it's more important. Vacancy is far more expensive than lowering rent $200.
Most expensive, right? It's truly the most expensive cost as an investor, as a landlord, that you will accrue. Like if you look at it on a P&L, right, over 5 years or 10 years, vacancy is always the most expensive thing that adds up for landlords. And I sound like a broken record because I say that every time I have one of these webinars.
It's also hard on the property, right? The moving in, the moving out is hard on the property. It takes a lot of work. I have to meet somebody there. I have to go through the condition, all that kind of stuff. So.
Yeah, turnover is difficult. One of the weirdest things that we experience, like on a vacant property, right? A lot of things happen when the property is vacant. It's not just loss of rental income, right? It's your operating and hold expenses. During the summer, we have a lot of like clearing sewer lines because, the property just stays vacant. There's always something that sort of has to work itself out then once you get a tenant put in place. So yeah, eliminating vacancy is really pertinent and important always, but especially now when there's just a ton of competition on the market. So understanding that philosophy is super important. Cyclically, obviously we talk about at Treaty Oak a lot. We talk about how leasing is cyclical and we always want to experience vacancy during the spring and summer months. Do you follow that also with your own personal rentals?
I do. I'm actually helping a client right now who's just very attached to me and wants me to help with their rentals. And so I do that. And one of the things I've been telling them is when we do go get a lease right now, if we find somebody this time of year, let's offer them something that expires in 2026, January through April. They get to feel like, wow, I have choices. They feel like they have agency, and we're getting you into a much better cycle.
Yeah.
So absolutely. I want to have vacancies before July, ideally, because I really do feel like everybody kind of goes to sleep for the rental market in July.
Yes.
Everybody's traveling. They don't want to move.
Yeah, I mean, there's this argument, right, in rentals and the cyclical nature of it, where leasing season goes up until school starts. But I found that really it really peaks in June, and we see that just in the rental statistics, obviously, right? But it peaks in June, and by sort of 4th of July weekend, people want to know where they're going to land if they are following some sort of school cycle, things like that. And I always really appreciate renters that start looking and they're planning ahead, right? So they have a move-in date of like 45 days from now, and you as the landlord, you go, we need to get you in. But then I also think to myself, oh, they're planners. Like, this is great, right? So this is a good sign.
But they also probably plan their money pretty well if they know where they're going to live 30 days from now. That's great. Yeah.
I love it. I love it. Okay. So rental market, we understand it's kind of, it's coming down to the end of the year, obviously. So this just naturally, no matter what's going on in residential real estate, like no matter what, it's going to naturally slow down before the holidays. People want to get settled and they want to be, they want to land. Talking about you, and you obviously help not only investors, you help, buyers, sellers, but investors. How do you, when you sit down and you meet your client, your investor client, and everyone's strategies are different, how do you understand your investors' goals? And then how do you help them sort of like narrow those down, right? How do you help them fine tune their trajectory, especially in the Austin market, right? The old school sort of investment strategy, we hear things like cash flow and well, cash flow, and I call it old school now. But it's not old school, I remember that I was saying things like cash flow often in 2011, 2012, stuff like that. But how do you work with your investor clients that way?
So, I try to figure out what their goals are and make sure their goals are realistic to the market that we have. And also people's goals tend to be different at different times of life, right? If I could go back and do it over again, which you'll hear me say a lot, like what would I do differently? The things I would do differently is I'd probably buy a few more places with a little bit less down payment. I would not plan on paying them off, which that was my goal when I first started purchasing when I was 28. Now, as I've gotten a little bit older, I'm like, oh, wait a second, maybe I wouldn't have planned that. I have one place with a 15-year mortgage, and I don't think I would make that same decision now. And so I think people's goals are different depending on what phase of life they're at. If you are 60, 65 and they have, X amount of cash to deploy, cash flow becomes a little bit more important, right? Because at that phase of life, that's what you're trying to do. You're trying to make your assets work for you. When you're younger, appreciation is probably more important because you have more time also to recover from market correction. People that have purchased properties for rent in 2022 and they're in their 30s, great, they can wait 10 years. The market's likely to seem far different 10 years from now than it is now, provided they can absorb any negative cash flow in the short term. So it's really important to kind of refocus people on what are their goals and do their goals match their time of life and that's not really for us to say. I used to be Series 7 licensed and Series 63 licensed. And there's some things you can say as an investment advisor when you are licensed in those areas. And so I kind of shy away from making those decisions for people, but kind of like asking them the questions to get them where they need to be.
It's really interesting. A lot of the clientele that I'm seeing right now are people like you just described, purchased in 2022, maybe in their 30s. And so when they come over to Treaty Oak, and they're coming to Treaty Oak often because they are experiencing a failed sale right now. I sit them down and I say to them when we jump into a video call, the very first thing I ask them is I say about your investment strategy here. And most will laugh and they'll go, I'm not sure. And so I explain to them, cash flow and what that means. And I explain appreciation and what that means. Is that kind of what your conversations are looking like now? I think that's so interesting. You mentioned something, appreciation, cash flow. You mentioned that you wouldn't have paid off some of your properties. You think that your strategy would have been a little different. Can you tell us a little bit more about that and why you would do things differently that way?
Yep. So I'm going to back up just for a second and address something that you said about talking to people about cash flow and appreciation. And then I want to talk about that too, because it leads into that. I just recently had a client purchase at the peak in 2022, and we sat down and they were really stressed out about their negative cash flow. But we have a tool that we built where we can look at cash flow over 10 years and do like a theoretical what if analysis, right? But then we can plug in also what appreciation levels are going to be. And using just a 3% appreciation, and if you only have 20% down,
Right.
or let's use 25% because it's easier math,
Sure.
you would make 12% return on your down payment if you have 25% down. And if you only have 20% down, which is less, your return's going to be even higher. So what we figured out for this client is even though they would be negative cash flow for the next 10 years, absorbing negative cash flow, at the end, they would still be 11% return on their down payment. And it let them off the hook for feeling like, oh my God, we made a terrible mistake. Because you're looking at the whole picture.
Right.
And so using that same math, if I could go back and buy, obviously it's easy to say now with the benefit of hindsight because what the real estate market in Austin has done in the last whatever how many years since I've been investing, but I would have preferred to have purchased one or two more places and been more highly leveraged, because leverage amplifies your returns on appreciation to the upside. It also amplifies your losses.
Yeah,
So it's really
right.
important that you can sustain the negative cash flow and support the negative cash flow. But generally, if you look, if you go to, I think it's the St. Louis Fed, has some really good charts about property values in Austin over the last 30, 40, 50 years. Real estate tends to go up over the long term.
Absolutely. And when you track appreciation, right, you track it on at least a 10-year spread, of course, right? We do have in our webinar, it felt like a really great segue. So talking about going to the St. Louis Fed, things like that, we can sort of segue into how do you provide your clients with an expert market analysis, which will sort of like guide us into what sort of tools do you use, right? So walk us through when you get your client and we've assessed like where they are in their life, where their investment next steps are, right? Whether it be retirement, whether it be they're just starting out and you have this really important conversation. That's the most important conversation, right? Deciding what it is that we're doing here with our money. And then how do you take the next step into analyzing the market for them, helping them identify what they want? What does that look like?
Yeah, so frequently people say, yes, but I still want cash flow. And so I found myself, like anecdotally, I knew that we didn't have cash flow in the Austin market. And I knew from acquiring my own portfolio, even, in the early 2000s, I sometimes was not cash flow positive right away. I bought properties because I liked them, because I thought somebody else was going to want to rent them for me and that I could support the negative cash flow, minor negative cash flow. So what we did is we built a tool that allowed us to analyze the cash flow on all the properties in the MLS at the same time. And when we do that, it isn't about finding the best cash flowing properties, it's about removing the worst cash flowing properties. And then using that tool in a different way, I was able to create a scatter chart of cash flow based on 20% down, which is generally, or 25% down, which is generally what investors need to do. And then I could show people the data. Just last week, I opened the spreadsheet for somebody and I sorted 3,000 properties. And we select a subset of the Austin MLS, and there's things you do in this model to just filter for a good subset. But I was able to sort by like the cash flow and show them only 20 or 30 were even positive. And, based on, it's theoretical analysis, right? So it needs a human to go dive deeper. But the value in it is it removes the 2,000 worst properties, and it helps the humans focus on the 50 best or whatever. And we actually share this with some of our colleagues too. So that was really a powerful tool for our clients to kind of refocus them, just to make sure. And it's not about really wasting our time. I don't want them to think that we're not doing a good job for them. I want them to understand the context of the market. It's not that we don't want to find you a cash flowing property. I would love that. It just doesn't exist. Let me show you.
Right.
We don't want to go unicorn hunting and you're not shopping for a unicorn.
Certainly, out of all of the agents that I talk to, this is a question. We all get that one investor that says, I need cash flow, and it's got to be 400 less. It's got a cash flow. Where is it? And then I talk to agents, and they're just spin their wheels trying to produce this unicorn. Understanding, I think, to take it a few steps back, understanding that we can't produce unicorns for people is a really great, just like daily mantra, right? I cannot produce a unicorn. I might be a unicorn, realtor, but I cannot produce an actual unicorn. And you would think that providing data and all of the information really helps them with that. Any sort of feedback or advice for agents who get the unicorn demanding client and they get stuck in this cyclical conversation? What's your advice to get out of it? Do you continue to work with that agent? What's your advice?
Yeah. So if we have a client that does kind of focus on that and gets locked into it, we obviously I show them that spreadsheet, I show them the data. And then what we do is we send them the top 50 or the top 100 from that tool every week. And then we show them, like, these are the ones that we would really focus on. They get to select them. And then we run analysis before we go out. Because if it's going to be a numbers conversation, let's look at the numbers before we go out. And that kind of tends to focus people, and they realize that isn't necessarily this market. The other part of the education, I think, is markets give you information if you're listening. And the market is very efficient in general, long term. So if the market is giving you cash flow, you may not be getting appreciation. You need to look at that long-term compounded return. That's probably similar between the two properties, right? I actually haven't done this, but if you look at, and some people need to go into different markets. Like, I have a client who is purchasing an investment property here. She's younger. Her parents are older than I am, and they sold a business. They wanted to go invest. So they went into a different market where cash flow is the primary driver in that market. The other thing we do with people is we have another tool. We call it a retirement estimator, and we give it to our clients. And it allows them to do like a what if scenario. We call it a retirement estimator. Because we don't want to call it a planner.
That's incredible.
But we layer in properties, and they can see for themselves, okay, even though I'm cash flow negative right now, with 3% appreciation, 4% appreciation, what does this look like in 10 years? And they can make decisions about whether they want to add that property to the portfolio.
That's wonderful. Do you have clients who invest in Austin and then in other areas also? And what do they like about Austin in comparison to other areas? And what do they dislike about Austin in comparison to other areas, perhaps?
We have landlord-friendly laws, right? So that's a little bit easier for people. And sometimes it takes a little translating for people when they do purchase here. But my family's from Chicago area. I don't own anything in Chicago. I wanted to in the past, but I just kind of don't necessarily want to deal with the landlord's rules that are so different there. And just like here, even commercial property has even friendlier landlord rules, right?
Yes.
So I think that's what people like here is the rules with the landlord. I think they like the appreciation, but they understand. At least all my clients, we've talked to them long enough where they do understand they're probably gonna have some negative cash flow. And I tell everybody, if you are not planning on holding on to real estate, if you're gonna live in it at least 3 years, if it's an investment, 5 to 10. Please do not purchase real estate with me if you plan on owning it only 2 years.
Right, right. I think that is really great feedback. I talk about the long-term hold strategy. What would you define a long-term hold range as?
5 to 10 years, but I also tell people what's key about it is you control the market you sell into. You don't want to be the person in March of 2020 puking out of a stock position, right? That's not what you don't want to have your back in a corner. As long as you get to select the market you choose it, you sell into, that's everything.
I think that's great. One of the other things I coach agents on when they are helping a client identify, what property to purchase, well, they're trying to choose between these, 3 or 4 areas in the MLS, right? And what do you think about them? And I think, well, who's going to be your buyer of that property in 5 to 10 years, and I give lots of different examples, but age is sometimes important, location is important, appreciation, of course, is important for that particular area, and growth, things like that. So here we go. We've had goal setting with our clients, our investor clients. Then we have walked them through the market analysis. We've narrowed down the 2,000 worst properties out there. We understand strategy. They're still here. Now that they've purchased the property, then where do they go? What do you do next? Obviously, I do know because I've known you for a while. You do understand the importance of having a professional property manager there, obviously. Why is a hands-off experience, or why is a property manager important for an investor? How does it help the investor as a whole?
So I've called you before to ask you questions about property management, right? Because even though I have my own portfolio, you have more data points of experience. It's just like anything else, right? We help some of our clients get a renter in place, but I do tell them, if you're going to have a property manager, let the property manager get the renter in place, because now they might have things they look for, the way they vet the clients, the way they want to start up that relationship, so that the property manager has success long term. He finds you a renter, and then the property manager has to deal with that when they might have made different choices or guided you differently. So I just think everybody should stick to their expertise. Life is better that way. I don't like getting out of my swim lane. I don't want to go do commercial property. Just don't want to.
Eric Bramlett has a really great way of explaining why property management is helpful to investors. And it's because it takes, it gives the time back to the investor, right? They have more time to focus on things like working with Jen to identify more investment property, and they're not being bogged down with, phone calls or tenant anxieties that might come up, or property maintenance, things like that. So it allows them the opportunity and the time to focus on their highest and best use, and whatever that might be, right? So when I talk to clients, it's, well, you're retiring, so your highest and best use of time is being with your grandkids and, being out on your ranch or your farm, things like that.
And really the goal when you have an investment property is to have your capital work for you silently in the background, right? That's why people do this. And so I don't want to optimize for all the variables. I don't need to also be the property manager. I am best served going and making money to go buy another rental property. If I want to get involved, that's the best way to get involved. That's the best use of my time, is going after that 11% long-term return, not going after the 8% a month or 10% a month, whatever property managers charge. I also have some thoughts on multifamily that I did not have up front when I was younger and purchasing property. I bought a fourplex. So this is one of the things I talk to people about. I tell them my experience because that's like the best thing. I don't know what it's going to look like 20 years from now, but I'll tell you the decisions I made and how, what I know now that I didn't know then. I bought a multifamily property. I did buy it in Terrytown, so I think that's kind of worked in my favor. However, I've watched the single family properties around me quadruple in price since I purchased mine in 2010. And the buyer of my multifamily of a fourplex is only going to be an investor. And investors do not make irrational, in general, they don't make irrational investment decisions. So my property is not likely to increase 4x the way the single family homes around me have. And so that's something too I let people know, like I'm happy to help somebody find multifamily. There's a lot of great reasons for it. You know, it's worked well for me. I really love that property. But as far as a return goes, would I have been better served by buying 4 single families at the time? I think probably, but you don't know.
I have very strong opinions on fourplexes. And so I love this feedback. I've sold like 250 fourplex transactions maybe back when I was in sales. And so I've walked all the fourplexes and I've really experienced them. I haven't walked yours, of course, and everything in Tarrytown is a really cool, unique, piece of property. But in general, what I do talk to clients about now is like what we just talked on a minute ago. Who's going to be your buyer pool? In 5 to 10 years after a long-term hold, who's going to want to buy your property? Are they going to want to buy the single family that's zoned to, whatever school district? Or are they going to want to buy your 1979 fourplex that has been used solely by renters times 4 for X amount of years? And that's 4 dishwashers, 4 hot water heaters, 4 stoves, 4 refrigerators, And so you do need to think about that. It's really important to think about it. And we will get buyers who do like to buy fourplexes. They have, again, important to talk about and start the conversation off with, what is your strategy, right? Because some people do have a strategy, and I've found that the strategy with Austin and the pockets of where fourplexes are often located or were built on a large scale, right? Tanglewood Forest is a great example. I have found that the investment strategy for a lot of buyers is to buy and have units and doors that are close to each other. It's more economical for maintenance, more economical for them for management, things like that. But fourplexes are interesting. And I have chatted with you about your fourplex. The great thing about that one is that it has performed for you, though, correct?
It has. I mean, yes, it's performed for me. It's also, I took 6 months off of trading and I learned all about construction. I was like, I'm gonna learn about construction, and I gutted it and I did a down to the studs remodel. So it was valuable for me in a lot of different ways. Because of the location, it will probably work out just fine. But, I tell people about my mistakes so that maybe they can make different mistakes, not the same ones I made.
Yes. As long as we are learning from mistakes, I think everybody is good. If we are not learning from mistakes, there's a malfunction, I think. So speaking of mistakes, we can sort of venture off into our Q&A segment. What are some common mistakes investors make in the Austin market? We had a couple of talking points there: overestimating cash flow, not understanding seasonal fluctuations, failure to plan for the future property tax increases due to rapid appreciation in Austin. And you had some notes there about, just losing sight of long-term goals. Any other notes on that topic?
Yeah, I do find that people, I was telling you about that client that called to sell their, they're not sure whether they're going to sell or rent, and they know they will be cash flow negative. And just like seeing the whole picture. Think about the cash flow, think about the appreciation. Don't feel like, unless of course there's a cash flow issue where you can't support the negative cash flow, then by all means people have to make whatever decisions they have to make. But if you can support that, so like when I was talking to somebody once, they said, well, I'm going to take this pile of money and I'm going to pay down my mortgage to bring that payment lower so that I will be less negative cash flow. And I'm like, that's great. That might be one option. Let's see what this looks like if instead you use that pile of money to subsidize the negative cash flow. Does that give you more options? Do you feel like you have more optionality in your general life? Will you feel more secure because you have that pile of money there? Right? Just look at all options instead of fixating on getting that cash flow positive, because it's not always a bad thing long term. And then people, right now, I have a couple investors who are like, what, this property isn't performing the way we thought it would, and so we want to sell it right now. And I'm like, that's great. Let me show you some inventory charts. this is tantamount to somebody calling their wealth manager in March of 2020 and saying, I want to sell everything because the market's going down. There's a lot of inventory right now. If you have to, by all means, sell it. If you don't, think really hard about this choice.
I think that that's really important. And it's giving me two different talking points. Number one talking point is a piece of advice and something that I mentioned to clients when they're saying, gosh, the property taxes have gotten really expensive this year. We've had a lot of maintenance. We're thinking about selling. And the first question that, comes from me is, well, what are you going to do with the money? And so that's always, a thought that I put out there into the universe. If you've got something that you're going to do with the money, then it's time and let me get you back to your realtor. But if we're just sort of, like noodling and looking at the maintenance, then let's do an analysis of, how much vacancy you have not had in so many years, X, Y, and Z, right? The other thing that I coach clients on, and I'm curious as to kind of your advice on this point, good landlord, right? Someone who can afford their rental property. So we've got the money to buy an investment property, and then kind of like what's expected after that. What do you coach your clients on needing to have like in their personal reserves to sort of like maintain and operate the property? Do you use any sort of tools for that?
So what I did when I bought that fourplex is I sat down and built a spreadsheet of like how long I thought a refrigerator would last, how long I thought the AC would last, the roof, things like that, right? And then I just kind of layered it in and divided it up by year. And what I came up with at the time, and I never asked you about this, I'd be interested to see what you think. I came up with about 8% number. I should be saving about 8% of rents for maintenance. Now, as a practical matter, am I that rigid about it? No. When I needed a new roof, I was like, oh, a metal roof would look really nice on the building, So I'm not as rigid as I probably ought to be. And I did not follow that advice either when I was younger. I was so focused on getting chips on the table to appreciate with highly leveraged that I sometimes had terrifyingly little to back that up. After I purchased a place, I was like, okay,
Yes.
but please do as I say, not as I do.
Yeah, of course.
Yeah.
One of the things I tell clients is, listen, once it comes over, into management inventory, for example, I coach them on needing to have and being able to like float. You can kind of, propose this anyway, but needing to have in their own personal bank account the ability to cover their mortgage on the property for 4 to 5 months out of a year at any given time. Doesn't mean that you're going to have vacancy for that amount of time. And it doesn't necessarily mean that you're going to have the actual vacancy. 4 to 5 months of floating the mortgage could mean an evaporator coil replacement or a new water heater, plus 1 month of vacancy, right? Plus one leasing, compensate, right? 1 month of leasing fee or something like that. So
also, like worst case scenario planning, what's your worst case scenario? Right. If you are okay, if you can wrap your head around your worst case scenario, then you can move forward. So like worst case scenario is I have to, in my fourplex, replace all 4 ACs at the same time. It isn't a highly probable event, but it's my worst case scenario. So I should be ready for that.
yeah, that is a worst case. That's my nightmare.
I mean, it's not likely to happen, but now let's see, they're all 14 years old. It's going to start happening.
Yes, it is. This is so incredible. Okay, Q2 that we had down here under our question and answer. How can I help my clients compete in Austin's competitive market? Which is interesting as we apply this to investors, right? So maybe you can mention how you do that just in general, and then as it applies to investors, and I'm not sure that there's a ton of competition with investors right now.
Competition for tenants.
Yes. Yeah. I mean, we can talk about that. What do you think is important? What is the most competitive aspect, right? I guess for tenants, as it applies to tenants, what do you do to fill vacancy? Actually, it's a great question.
Yeah. So, as markets shift, different variables go out of whack, right? We all experienced 2021, 2022, where inventory shortages were the variable that we had to contend with. Now, inventory abundance is the variable that we have to contend with. And so just knowing that, what we're experiencing is probably still a post-COVID market shock. We all remember like weird, shortages and stuff like that from COVID. This is probably the tail end of that. And we'll probably see something that comes back to normal in the next year or two. And so that's, I think, very important. As far as competing for tenants, price, right? As long as a property is, it's just like preparing a listing. The reason why it's important to be so deliberate when you have a listing or deliberate when you're leasing a property about condition and how a property appears is because you want price to be the only variable. And if you're presenting it well to the market, then you know what you have to move in order to attract the consumer.
You can absolutely control price, right? Yeah, if that's your only variable.
Exactly.
I think that that's great.
And do the worst case scenario math. Yeah, does it hurt to pay another 100 or 200 a month subsidizing the payment? Sure it does. But go ahead and do the long-term math. You know, what people do in real estate quite often, I think, is they compare the money they're spending to the way they spend money in their everyday life rather than comparing it to the size of the asset. Yeah. Subsidizing your rental property by $500 a month is terrible because that's, I mean, how many dinners out is that? Oh my goodness. His entire budget for groceries for an entire month. That's correct. But what is the size of the asset? We're not used to, we have a lot of numerical bias, I think, as humans in general, because we're not used to dealing with numbers as large as the leveraged real estate assets that we're dealing with.
Right.
And we very frequently make short-term decisions based on how we spend money in our everyday life without stopping to think about the price of the asset that we're dealing with.
You are 1,000% correct. Yeah, absolutely. I love that. I'm thinking about how I'm going to break that out as a reel for us to share after this interview. I think, you know, one of the other interesting Q&As, and I know that you have some interesting thoughts and I have interesting thoughts and I want to hear your feedback. What should I consider when advising an investor about new developments versus established neighborhoods? I thought that your feedback on this is really interesting, and so I'd love to hear it.
So everything has pluses and minuses. Yes, if you buy an investment property and that's brand new construction, you're going to have fewer maintenance issues, hopefully, right? That's the plan, at least in the first 5 to 10 years. However, so the type of trader that I was statistical arbitrage. So understanding the relationships between all the components of something. So my example I always like to give is somebody has soybeans, they buy soybeans, they process them into meal and oil. Those three products are trading based on the relationship to one another. You do the same thing with real estate, right? There is land and there's a structure. What does it cost to build the structure? How does the structure depreciate over time? What is the part of the asset that's appreciating? And the part of the asset that's generally appreciating is the land. So when you buy a brand new house for an investment purpose, you are buying the structure when it's at peak value. So for me, my strategy has always been, I look at real estate as a continuum. An empty piece of land is not going to call me and ask me to change its light bulb. Awesome. However, it's going to have this bill that's called property taxes.
Yes.
I did have a tenant ask me to change their light bulb, and I was like, yeah, I don't provide that service. But it has property taxes. So I liked to purchase properties where they were in this spot of, they were of course not tear downs, but they had something charming about them and they had already depreciated quite a bit. Right? So I'm not buying the brand new property for a rental property. That doesn't make sense necessarily because you're never going to be cash flow. It's going to be years before you cash flow if you buy something in the central city that's brand new construction. It's just different goals, right?
Certainly.
So what I tell people is, yes, if you are looking for something that's lower maintenance and you're okay with that depreciating part of the asset, absolutely go buy new construction. If you can manage it and go somewhere where you're buying where the structure has already depreciated a little bit and the bulk of the investment, let's say more than 50% of the investment is actually in the land value, then you're buying the part that tends to appreciate.
That's great. What are some tips for maintaining tenant satisfaction and minimizing turnover? That's an interesting, yeah.
Having them talk to my husband instead of me. We have really good relationships with our tenants. I say that jokingly. You know, it's really easy. Like I start off being a little bit more strict because I think it's easier to back off of that and be kind. But I do start off being very, very strict because I think that just sets everybody up for just a better relationship. But, you know, we have had really great relationships with our tenants. We have like extra window, like not window units, but like those temporary ACs.
Yeah.
Yeah, and we store those just so that, we can't always get the HVAC. When our AC goes out, everybody's AC is going out. So even us, when we have vendors that we work with all the time, we can't get them out there right away. So it just helps people feel like you're caring about them and you're helping. And so we do a lot of things like that.
Great.
And they don't complain then. They're like, yeah, we get it. The HVAC guy's going to take a week, whatever.
Yeah. And one of the things we do at Treaty Oak, once we lease a property, is we do welcome walkthroughs. So we go on site and we meet the tenant, and we of course make sure that they are who they say they are in their application. But we try to set them up for success. We've just done a make ready. Our client has spent a lot of money getting it, making sure that we're adhering to property code. But we also want to set them up for success in the home. Like, not every single property is the same. Not every single home has the same AC unit in the same place, the same irrigation, the same, trash days, things like that. Some people are coming into town from different markets, right? We have had some tenants come in from Chicago, and they lived in an urban setting. And so for them to have their garage, their irrigation system, and like all these other components of the home, if you just throw them in there, they may not know what to do, and they may not care. But we meet them out there, and then we try to show them all the functionality of the home. And I think that it really sets the tone. They appreciate that their landlord came and met them, and it sets the tone for the relationship and the communication with the tenant and the landlord, right? And so I encourage. We do have people that are watching that self-manage their own rental properties, like you do. They also have clients who self-manage their own rental properties. And this is one of like the top 3 things that I strongly encourage that they do in this sort of situation.
I have an email that I send to my folks. So we have a welcome bag with like felt pads for the wood floors, because most of my properties have wood floors, and I'm very particular about not damaging them. So, but I'm willing to pay for it, right? So here's the Bona. Please only clean the floors with this. Please let me know if you run out and you need more. I'm happy to pay for it. But it's like a whole bag of like a Bona, the mop, coasters for underneath the beds, because a lot of times if a bed is on a wooden floor, it will scratch over the years. Coasters for those, felt pads, what I want them to use to hang photos in the wall, everything. And then please let me know if you need any more of these. I'm happy to pay for it. Nobody ever asks, but I also randomly just buy them more stuff and send it to the house.
It's really cool. I think that that's very interesting. That's a very personal touch, especially if, sometimes one of the things that I chat through, and I'm sure your clients are thinking about when they're looking to identify properties, sometimes the different components of properties might not be ideal for for an investment property. They will naturally have heavier use then you might take care of your own home, things like that. So I think that's very helpful for properties.
I don't really want a rental property with pool, right? I don't want the insurance. I don't want to ever get that phone call that a child was hurt. I don't want to deal with frozen pipes. I just don't want the extra. Yeah.
I can totally understand. Yeah, absolutely. We've got some sort of like personalized Q&A for Jen, and I thought that these questions were kind of fun and interesting questions that I hear a lot from other agents, so I'd love to get kind of your take on them. The number 1 question was fourplexes, so of course we've touched on that. Like similar to this, because when I was getting into property management, I, really wanted to get a small apartment complex, and I thought that was going to be that was going to be a really great plan, and it wasn't. So I was wondering what your thoughts are on small, like maybe 8-door properties, and you're a Hyde Park gal, so I know that there are some really unique ones over there. Any like interesting insights or feedback on those that we might not naturally think of?
Yeah, absolutely. There's actually a different place for those. But because I have buyer representation agreements in place with people with a specific strategy in mind, I can't really talk about it. But there are different plays, right? Like, I'll use my property as an example. My fourplex might not compete in value with the properties around it. However, it's in a row of other fourplexes. It happens to be on Enfield Road. Okay, so there's probably a redevelopment strategy with that in the future.
Yes.
That may end up making something that wasn't a great decision. I mean, it was fine decision, but it wasn't fully optimized. Make it be a better decision later. So there's other strategies too, right? It just you have to be thinking of all the future uses. Who is your future buyer? Like you said, is it a developer? Is it individuals. My exit strategies I thought was going to be selling them as condos someday, and that's probably not going to be my exit strategy, right? So many different exit strategies. You just have to kind of think about what they are up front, and then as life goes on, you'll learn other things and you'll decide those were wrong.
Thank you for touching on exit strategies. That was one of the questions that was submitted in our Google Forms sign up. So I appreciate you touching on that. Thank you. What projects are you currently working on? Since we're still, we can chat, you kind of put a final note on what you're doing.
I've been redeveloping a lot of my properties. So I liked to buy larger lots because so multifamily can be a little bit of a different animal, duplexes and fourplexes, but I've always really liked ADUs and back units, and so I've been building. I'm building my second ADU right now.
That's awesome.
And so my brother's a builder, and he's building it for me, and I just really love ADUs, and so it's been a lot of fun to design and make the most of the pieces of land that we bought.
I didn't know your brother's a builder. He's local here?
Yes.
Okay, cool. Do you want to do a plug for your brother?
Sure. Yeah, Theo George, which actually means Uncle George in Greek, but that's the name of his building.
Fabulous. Okay, cool.
He's a luxury home builder.
Any other areas, any other markets in Central Texas or the U.S. that excite you?
That's interesting. So for us, because of our age, I'm excited about where I'm going to be in July and August in my 60s and 70s, because it's not going to be Austin. So I think a little bit about where are the most affordable places to go, where I could find community and find the vibe that we have in Austin. And so for me personally, I'm thinking about the Midwest. But again, balance, would love to be on a lake somewhere in Minnesota or Wisconsin, but for me, that's it. Not for investment purposes. I tried purchasing something remotely once. I am not wired for that. I have incredible respect for our clients that allow us to guide them through a remote purchase, because I would lose my mind.
Yes.
And I tried it in Minnesota. It did not work.
Yeah, same here. Actually, I'm pretty type A, and okay. What is one piece of advice you'd give to beginning investors?
I wish I had spoken to more people that had owned rental property. I spoke to a couple. Like, I have a mentor that got me into real estate who is a commercial developer in Austin. I'm so fortunate to have met him. But I wish I had also spoke to more people, because if you speak to a lot of people, you're going to hear their mistakes, and maybe somebody would have told me that about fourplexes. And in the end, it's fine, right? But I'm also a really optimistic person, so it's hard for me to really be upset about anything like that. But maybe I would have learned more, and I would have gone into it with more confidence, or maybe I would have purchased another property, right? Mistakes aren't just the decisions we make. Sometimes the mistakes are the decisions we don't make, right? And I think that for me, if I had spoke to more people or found a realtor that had some experience buying investment properties when I was 28, I may have purchased more.
You. That's very insightful. What is one piece of advice you'd give to beginning agents repping investors?
So I touched on this earlier. I came with an investment background, with a finance background, with an entire career as managing portfolios, a bunch of different asset classes. Real estate to me is just another asset class. Even after that, I still went and I was somebody's assistant for 2 years, and it was very purposeful. It wasn't an accident. I went and supported Paul Ruddam, who's an amazing human, and I thought, I'm going to work for somebody where I get a lot of data points and I get exposure. I created an apprenticeship for myself. And data points give you experience. I mean, I think you touched on this earlier, how many different multifamily transactions you've had. Great, you're going to know so much more about owning a fourplex than I do, right? So I think for new agents that want to support investors, find that apprenticeship somehow. Work alongside an agent. If you don't have your own investment portfolio, I have my own real estate portfolio. And Adrienne, you still know so much more about managing rental properties than I do, right? So I tell my clients that I manage my own properties, but I don't know how to manage your properties. And so as with anything else, get exposure to as many data points as possible before you give people advice, because that sickening feeling when you've made a mistake on somebody else's behalf is awful, and you never want to experience that. So I would say try to get as many data points as possible, create that apprenticeship for yourself, refer the business out if you don't feel like you are equipped to help to guide somebody through that, because you don't know what you don't know.
Yeah, absolutely. I think that that's really important. I like to align myself with people who do things that I admire and respect, and that I'm goal oriented. I set goals for myself, and I like to achieve my own personal little goals. And I'm still learning a lot, learning about running a business and running all sorts of different things. Learning, doing these webinars. You and I talked about how we're, kicking this stuff off using new software, right? We push
Yeah.
ourselves, but we talk to people about it and we really dive deep into it. And it would be difficult to rep investors without, consuming and absorbing and saturating yourself in other people's experiences, mistakes, knowledge, and things like that. So just really diving in deep is very important, and I couldn't agree with you more. Thanks for sharing that. Let's our Q&A. What is your favorite tech search tool for investors?
The tool that we built.
Yes.
It saved me so much time.
Yeah, and so this is like an internal tool, just
Yeah.
to clarify, because we talked about it at the beginning. So at Berbas Group, you guys have built your own internal tool that it helps identify cash flow within the MLS opportunities, right? And then it has a whole bunch of other analytical data tools and support offerings within that to help investors identify what they want and what perhaps they don't want for an investment property with their purchase, right?
Yep.
That's awesome.
And a lot of what if scenario planning, because I think that's where the decisions are made. What do I want this to look like in 10 years? Well, let's back up from there.
This is one a little off topic, more about you. How do you create a work-life balance in real estate?
I'll let you know when I do it. I really enjoy working, and so for me, I've been playing a lot of tennis, and I think just having some place I need to be other than work, because what I find is I always have. It's a little bit like knitting. I'm also like a knitter and a potter, and work to me is like, wait, there's that other little project. Let me work on that for a little bit, see what I can do with it. And so I enjoy it. So that's the problem, is that once you do it all the time, your clients kind of expect you to be there all the time. So it's creating structure, just like we hold ourselves accountable to go into team meetings and things like that. It's creating structure with the things that you do that aren't work. Making sure that I have tennis clinics that I'm registered for, that I'm going to pay for, whether I show up or not. That's helped.
That's great. Work-life balance. So we always kind of chuckle, right?
But I don't mind it. I mean, I think everybody was a little burnt out after 2021, 2022. But that burnout has subsided, and, I really don't mind it. I love what we do.
I think that you mentioned that you are a positive person, and I think you are a extremely positive person. And I think that maintaining just a positive mindset, always trying to see positive things, it sounds kind of cheesy, but I think that it is incredibly helpful. I think that having a really sharp mindset and remembering, okay, this is what happened negative, but there's always a positive. I think
Always.
that, yeah, absolutely, right? It's just how you get through the day. So I appreciate that about you. I love that quality. Just a couple more questions. I think as we're starting to wrap up, we can do some like sort of actionable takeaways. So Jen, for the people who are watching, to kind of like summarize for them, if they're taking notes, and I've actually been taking notes in our webinar as well. Just some action items that people can put on their list. We're going into the slower time of the year that is, seasonally for people. I know that I love to put together, I do like my own little quarterly checklist, but I put together a slow season checklist. Any sort of actionable items that you can give to agents who, whether they're new, whether they're seasoned, what is it that you do for yourself to prepare for 2025? I think I already know because I had lunch with your team members on Friday. But what are you doing to set yourself up for success for next year to make sure that you wrap up the year well, and as it pertains to investors too? Any notes for us?
Yeah. So first, the way we manage what we're going to do in the slow season is we have a list of ideas that we want to execute, and we try to be very thoughtful about them. So we had, like, every 2 weeks we have a meeting where we prioritize them by how important they are and how much time we think they're going to take, and then we nibble away at them during the slow season. I have a note on my phone. I'm always keeping You're driving down the street, you have an idea, put it on your phone.
Yes.
But don't let yourself get distracted by it, right? Don't go into a 7-hour deep dive on a new topic on learning how to use Riverside, let's say, if you don't have
Still
anything
learning.
you know. But the skills that I think are going to be important for agents that want to support investors, anything we said that you don't know about, if you don't know if you don't know the difference between cash flow and appreciation, let's start really basic. Most agents do, but build yourself a tool to. There is nothing like building your own Excel tool to understand a concept. If you didn't understand the concept I was just talking about leverage, build yourself your own calculator. See what something looks like with 10% down, with 25% down, with 50% down. Read on leverage. Be comfortable in Excel. I do not review my clients' Excel spreadsheets. My analogy for that is that's like cooking in somebody else's kitchen. No, thank you. Here's my Excel spreadsheet. You're welcome to get familiar with it, but I don't really use my clients' Excel spreadsheets because I want to always use the same set of tools because I don't want to make a mistake. Okay. But get familiar with that. Take some Excel training. There's great Excel trainers out there. There's a bunch of YouTubes on that. Be able to speak the investment language to your client. Get familiar with St. Louis Fed. Max Lehman, will sometimes give a little blurb about what's happening with the economic numbers. Understand that. Anything that you don't know from that, throw it on a list, copy paste it, put it somewhere where you can reference it in the slow season and go do some research.
Really helpful. Max is fabulous also. Max Whitlam, people. He's really incredible. I've known Max as long as I've been in real estate. So he is he's such a friendly and helpful tool. He has a little mantra that he says that says positive actions equal transactions. And I think I heard him say that in like 2020, the end of 2022 in a webinar. And I thought, you know what, I'm going to never forget that. And so I say it to my staff often. I think that that's a great mindset. I do want to make sure that we mention our YouTube channels. Jen, you are building up your YouTube channel. Do you happen to know what the handle is? I can send it out in our follow-up with the recording.
It's just Berbas Group.
Berbas Group, right? Okay, cool. Mine, same with me. Mine is Adrienne. It's at Treaty Oak Properties within YouTube. Okay. So please, guys, go ahead. I'm going to upload this recording to YouTube to make sure that it's available to everyone. But subscribe to our YouTube channels. We'd love to kind of build up a presence there. Jen, anything else?
We're planning on being very purposeful and planned with a lot of what we're putting out in 2025 as well. That's what we're doing right now, is spending our time planning all the messaging for 2025. And so there should be really good investment stuff on there in 2025.
I'm excited. I still remember, and I told you about this the other day, I remember watching the walkthrough that you did as I think you were laying foundation somewhere. Yeah. And I thought that it was incredible, and it is burned in my mind. And it's been a while since you did that, right? It's been about a year. But I really love your instructionals. I think that they are massively helpful. They are explained in a way for everyone to be able to digest and understand and absorb. And so I really appreciate that. I appreciate your openness to be on here today and to so generously provide me a big chunk of your time on this. We've been planning this for a long time. So
thank you for asking. It's really nice to be asked.
Of course. Thank you, Jen. Anything else that I might have left off that you'd like to mention? If not, okay, cool. Thank you, guys. We are going to end the live recording here in just a moment. I didn't see really. There we go. Thank you, Rachel, at Berbas Group on YouTube, just to make sure that that's on there. Thanks, everyone, so much for joining us. Have a wonderful Monday. And Jen, I really appreciate you so much.
Thank you so much. I appreciate being here.
Of course. Have a great day. Bye, guys.